So the Q3 earnings have just come out for Infosys. Revenue seems to have come at 45,379 crore rupees. Profit has come in at 6,654 crore rupees versus the estimated figure of 7,377. So profit has taken a bit of a beat over there. Revenue, again, as I was mentioning, 45,479 crore rupees is the number. Remember, viewers, as in our preview, when we had reported to you, we had told you that revenue could see a 2% higher jump at 45,204. So we're not very far from that number. EBIT has come in at 9,479 crore rupees versus the estimated figure of 9,500 plus. So EBIT has taken a slight dip even at that front. But this is how largely, Infosys seems to be doing at this given point in time. These are the Q3 results of Infosys. Of course, we'll be having our reporter joining us to explain what this exactly means. But Infosys revenue, again, just revising for all of you, the revenue has come in at 45,479 crore rupees versus the estimated figure of 45,098 crore rupees. Profit has come in at 6,654 crore rupees versus the estimated figure of 7,377. So that's where it's come below what was expected. EBIT, the operating performance, the operating profit, has taken a bit of a beating versus what was estimated. Not more than 100 crore rupees actually, if you see, because EBIT has come in at 9,479 and the estimated figure for the same was around 9,538 crore rupees. EBIT margin has come in at 20.8% versus estimated figure of 21.2%. So overall, if you look at each of these financial metrics ranging from the bottom line to the EBIT, where the operating performance of the company is concerned, you would see a slight dip from what was estimated. So not a very dramatic decrease, but still a bit of a decrease as far as the estimated figures are concerned. Revenues in constant currency terms grew by 1.7% on a year-on-year basis and 0.6% on a quarter-on-quarter basis. The company seems to have done well as far as its top line is concerned on an annual basis, but when you go on a quarterly comparison, that's come in about flat, of course. I now have the percentage figures as well. I was by far giving you all the estimated figures in comparison to what has been reported. Now I have on your screens, you can see the percentage increase and decrease as well. So let me take you through those numbers too. So going ahead, revenue at 45,479 crore rupees has increased 2.2% on a consolidated basis. All consolidated figures on a quarter-on-quarter basis, by the way. So these are all sequential increases as far as the revenue is concerned. Net profit has taken a hit, 9.6%. It's dropped quite dramatically as far as if you compare it to the bottom line. Top line. The bottom line has decreased 9.6% at 6,654 crore rupees. EBIT has increased 1.3% at 9,479 and EBIT margin at 20.8% versus 21%. My colleague Jasmeet is also here to help us decode these numbers. Jasmeet, what's exactly stood out, and do you think, as you know, I can also see that large deal wins have come at about $4.8 billion, which is comparatively lesser than what had come in for TCS and HCL Tech as well. So take us through those numbers and also tell us what really stood out.
Well, as at this point in time, we see a mixed set of numbers coming for the company. The profit is down, obviously, on the back of the labor code, new labor code change. The margins have come flattish. We were expecting a 12 basis point increase in the margins, but they have come flat on the flattish side. On the back, when you look at the overall revenue has beat in the estimates, but it's expected to be up 1.5%, up nearly 2%. There we see there's almost what we see coming in line as well. Now, while the interesting aspect here is the CC growth, while the CC growth expected was between 0.1 to 0.6 and estimates 0.6 in line with what the CRO is expecting. If you look at the overall deal wins, well, that's a surprise. Last time we saw a deal win of 3 odd billion, but in this particular quarter, the deal win is up nearly 57 odd new in net basis and it's at 4.8 billion. Even the Citi and other brokers are expecting a deal win range of anywhere between 3.5 to 4 odd, but 4.8 billion has come up as an overall surprise. So far we see good positive flows coming in for TCS. sorry, for Infosys, but in terms of the overall financial figures, we see a flattish up move. They have been stable given Q3 is generally weaker for all the IT companies. So far numbers have been flattish, but the profit is down on the back of the similar new labor code trends.
Okay, so one-time cost you said was of 1,289 crore rupees, and this was due to labor codes as well. We in fact have G. Chokalingam, founder and MD of Economics Research, joining us. Thank you so much, sir. Connecting with you after a long time. How do you see these Infosys results? What do you make of it? And do you think the revenue that's come in CC terms is a surprise?
Definitely, it is not not bad at all. It is below expectation, but that is mainly because of the nearly 1,300 crore impact of labor code charges. So before that, the revenue is up. Particularly, the PAT is up about 8.8% before charging for labor code. So and also the revenue is up around 9% year-on-year in rupee terms. So I believe it is a very decent result. Going forward, with the depreciation of rupee and adjustment for labor code charges in their pricing, I think the company should perform better.
Well, hello, Mr. Chokalingam. Just by joining in here. The guidance were expected to see an upgrade on the lower end, but the company has raised their guidance from 2 to 3 to 3 to 3.5. What do you think about this?
Yeah, I mean, in short-term, perspective, this is a good one, but the long-term trend is very clear. It is going to be in 2 to 4%, revenue growth year-on-year basis in dollar terms. One has to accept that. I don't think any player in the industry or industry as a whole can go beyond this 2 to 4% year-on-year growth. So from that context, I think it is quite decent enough. And also, when you see the market conditions, I think this sector itself becomes a defensive, and within that, I believe Infosys becomes more defensive in nature compared to other companies.
Well, got your views. But in terms of the deal win, we have seen the brokerages were expecting a deal win anywhere between 3 to 4 odd billion, but they have come at 4.8 billion, which is a massive uptick from what we saw in the previous quarter. Do you see the overall ramp up of such deal wins will add extra pressure in FY27 going ahead?
FY27 things may improve, but in the short to medium term, I think this deal win can further scale up. I think in totality, if you look at revenue term, the growth in revenue, growth in profit, I think it is slightly better than other large players in the industry. I think the market would look the stock from that perspective. That's why today before results, stock has not seen any major pressure despite other stocks peers coming out with bad results. So I think the market would discount this positively when market opens.
Got that view. How important do you think is for the company to report their AI analogy going forward? After we see TCS and HCL to come up and give their AI revenue, and something like Infosys, it's still a wait and watch. So what are your views on overall the company showing up their advanced AI revenue, and we're yet to see the commentary. The 4:30 we have the presser of the company. So what are your views on the overall AI ramp up going ahead?
Definitely, the company has made a lot of efforts. We have seen in the last 6 months a lot of official releases from the company in this area, many developments. But as you rightly mentioned, we need to wait for the company's meeting with investors and analysts. But I'm pretty confident that in AI, Infosys would at least on par with other players or even beat other players in terms of absorbing AI to their advantage.
Mr. Chokalingam, a couple of days ago, we were trying to decode the results of HCL Tech and TCS because both those results had come out on the same day. And we were speaking to the analyst, and because Infosys comes from the same space, I'd like to ask you the same question. You said that Infosys, the deal wins as far as for Infosys is concerned, could improve in the coming quarters as well, as at a time when investments in AI has intensified. Plus, companies are also reporting a substantial part of their revenue from AI operations. I'd like to ask you the sustainability of this, and to what extent do you think AI would now seep into its main operations and affect a bit?
In my understanding, AI would take at least 1 or 2 years to have a tremendous impact on Indian IT services companies. But in the short term, I think Infosys can, reduce the labor cost and also, improve the productivity. and manage the threat from AI in the short to medium term. So I'm pretty, of course, I continue to maintain my view that, the wealth creation story from the large IT stocks is over long ago. So it's only a defensive play. From that perspective, I believe, definitely there will be big impact in the medium to long term, but in the short to medium term, I think they can use it to their advantage in terms of improving productivity and reducing the labor cost.
Okay, so we're at least seeing a timeline of 1 or 2 years as far as the impact of AI is concerned, confidently speaking about it. But sir, HCL Tech, TCS, and now Infosys have, in a way, already set the template for the profit hit that these companies have taken because of the labor codes. Going ahead, I'd like to also get your insight on how do you think it's just going to be limited to this quarter, or going ahead, we could see some kind of pressure because of this reason as well?
Unfortunately, at least for next 2 to 4 quarters, the revenue growth and profit growth would be only in single digit.
Okay.
Just because all market conditions are bad and the rupee is under attack in terms of further depreciation, still one can bank on these stocks, to be defensive in nature. But otherwise, we'll have to live with this pain.
So do you think that in the next quarter as well, because we have been reporting the fact that bottom lines of all these major IT companies have taken a hit due to labor codes. Most of them have had some kind of serious impact in some form or the other. So in the next couple of quarters, say the next 2 to 4 quarters, we would see a labor code impact, is what you're saying?
No, I was talking about overall, the growth, because the base of IT export has grown so big and matured industry. But specific to your labor code, I think the burden will come down in the next 2 to 3 quarters. Because although economic theory says the rupee depreciation is positive for exporters, but we have seen exporters like IT service companies have not benefited much. That is because when customers also have become very smart, they price in the depreciation also, and they bargain. So that is why many companies have not benefited from the sharp fall in the rupee, in contrast to theory. So what I mean to say is that the labor code charges, at least the genuine cost side, that would be built in, any further weakness in the rupee, and that benefit for further depreciation can be used to compensate for the cost hike, labor code charges hike. So therefore, I believe starting from the next quarter itself, these provisions, these additional costs would start moderating for large IT companies.
Okay, so additional costs could see a moderation starting next quarter. That's an important takeaway. But thanks so much, sir, for joining us and helping us decode these numbers. And thank you so much, Jasmeet, for coming in and helping us understand the first layers of Infosys Q3 results.